Welcome to The Explainer. Today, we're diving into a technology that could literally change our relationship with money as we know it. Central bank digital currencies, or CBDCs for short.
So let's jump right in. As pretty much everything in our world goes digital, we've got to ask a really basic question. What's going to happen to the actual cash in your wallet?
To figure out where we're headed with our money, it actually helps to look back at a lesson we've all learned pretty recently about our digital lives.
I mean, think about it. Remember when we didn't think twice about our digital footprint? We posted everything, shared everything, and then, well, we got hit with some hard lessons about data privacy. That whole experience is exactly why the conversation around digital money is so intense right now.
So, what exactly is a CBDC? First off, it's not a private crypto like Bitcoin, and it's also different from the money in your bank account that you move around with an app. No, think of this as the official digital twin of a dollar bill or a euro coin, issued and guaranteed directly by a country's central bank.
Okay, so as soon as we start talking about shifting from physical cash to this new digital cash, we run smack into a huge problem, a real paradox that experts all over the world are trying to solve.
And yeah, this slide really lays it all out. Physical cash, it's anonymous, it's private, nobody knows you bought that coffee. But the digital money we use today, super convenient, sure, but it leaves a digital footprint, a permanent data trail. So the million-dollar question is, right, can we get the best of both worlds?
And this isn't just you or me worrying about this. For the folks actually designing these new systems, privacy isn't just on the list, it's at the very, very top. I mean, look at that, 95%. That's huge. And right behind it, of course, is cybersecurity.
And this quote from the World Economic Forum really just hammers the point home. They're basically saying that if people don't trust this with their privacy, it's dead on arrival. Getting this right is completely non-negotiable.
Okay, so how on earth do you solve this puzzle? How do you build something that's fast and digital, but also private? Well, the answer isn't magic, but it kind of feels like it. It's all in some incredibly clever code.
The bedrock of all of this is something called cryptography. You've probably heard the term. At its heart, it's just the science of secure communication. You know, using complex codes to make sure only the right people can read your information.
But here's where it gets really cool. Inside that world of cryptography, there's a specific tool that is an absolute game changer for financial privacy. It's called a zero-knowledge proof, or ZKP for short.
All right, so how does this magic actually work? Let's go back to that coffee example. You need to prove you have enough money for the purchase, right? Well, with a ZKP, your digital wallet can essentially tell the payment system, yep, the funds are there, without ever revealing your total account balance. The network gets the proof it needs, the transaction is approved, and all the unnecessary details about your finances, they stay completely private. Pretty amazing?
Okay, so this isn't just some theory cooked up in a lab. Let's take a look at where CBDCs are already out there in the wild, being tested right now.
First up, let's head to Sweden. They're testing something called the e-krona, and their whole philosophy is what you could call privacy by design. From the ground up, they're building it so that information is only shared on a strict need-to-know basis. The goal is to make it feel just as private as the banking system you're already used to.
Now, let's look at a totally different model. China's pilot for the e-CNY, their digital yuan, is all about what they call controllable anonymity. So what does that mean? Well, for your everyday purchases, your data is encrypted and private. But, and this is the key difference, the central bank still has the ability to trace transactions if they need to, specifically to stop things like money laundering or other illegal activities.
And this table just lays out the two approaches perfectly, side by side. On one side, you've got Sweden, trying to basically recreate the privacy we have now. On the other, you have China, building a system that's all about balancing personal privacy with state security. These are really the two big philosophies that every country is going to have to choose between.
So you can have the smartest code in the world, but that's not enough. The tech is really only one piece of this giant puzzle.
Because at the end of the day, it all comes down to one thing: trust. Will we trust this new form of money? People will only use a system if they believe, deep down, that it's safe, that it's private, and that it's fair. And no amount of fancy tech can create that trust on its own.
So how do you build that trust? Well, it seems to come down to these three essential pillars. First, you need rock-solid cybersecurity. Think Fort Knox level. Second, you need really strong laws that spell out, in no uncertain terms, who gets to see your data and when. And third, and this might be the most important, you have to educate people so we can all understand how this works and make smart choices.
And the good news is, the central banks get this.
They're not just building this stuff in a back room. Big players like the European Central Bank and the Bank of England are already putting out resources trying to explain how this all works and, crucially, how they plan to protect everyone's privacy right from day one.
Which brings us to the big, final question that's going to define the next decade of finance. What is that perfect balance between convenience, privacy, and security? The choice is being made right now in Stockholm, in Beijing, and around the world. They're not just about the future of our wallets, they're about the future of our privacy. This conversation is really just getting started, and we all have a stake in the outcome.